It does seem as though a lot of work has been done since the last meeting, and it would be an interesting time for them to announce an alternative to the US dollar system and a new framework for settling imbalances in international trade. And I think we now have an understanding of why gold has been on basically a straight line up this year.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 7th through October 14th, 2024, while supplies last. First, we feature Australian silver kangaroos at just $2.99 over spot. Next, backdated 1-ounce gold Canadian maples are just $60 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Doomberg from the very popular Doomburg Substack. Thank you so much for joining us today, Doomberg.
Elijah K. Johnson, looking as dapper as ever. How you doing, my friend?
Doing great. Thank you so much for coming on today. I did want to discuss the BRICS meeting that we're going to be seeing here very shortly. A lot of people are speculating that there could be a rollout of a BRICS currency unit, possibly backed partly by gold. I know there was a lot of speculation last year about this that didn't come to pass, but the BRICS nations continue to accumulate more and more gold. And it seems like, there's this movement away from the US dollar. So your take on this BRICS meeting and what could come of it?
Yeah, great question. And it is sort of the main event for October, I think, at least for people that are fans of the yellow pet rock, as we like to call it. So there is lots of rumors, perhaps even stronger than they were last year. I believe the meeting was in South Africa last year. This meeting is hosted by Russian President Vladimir Putin in Kazan. And it does seem as though a lot of work has been done since the last meeting, and it would be an interesting time for them to announce an alternative to the US dollar system and a new framework for settling imbalances in international trade. And there's some rumors, it's literally, I think, called the unit, that it would be a basket of BRICS currencies and 40% backed by gold. And if that is the case, and that's what comes out of the meeting, then I think we now have an understanding of why gold has been on basically a straight line up this year. And it would probably have to go significantly higher from here for it to serve that purpose. I think that's the big bet. There's a risk that it doesn't happen. We wrote a pretty speculative piece on the subject where we pondered whether, Lula from Brazil might be a sort of a double agent who is going to scuttle the meeting and keep the US dollar system in place. We'll see. There's other things happening at that meeting. We think we're going to publish on one of those later this weekend. But as it pertains to gold, gold is the one asset that doesn't make us happy when it goes up. I think, as I've explained to you before, it's been on a pretty serious run. We're cautious about the medium-term outlook. It does certainly have a feel of a bit of a sell the news event. But we'll see. Either way, it's going to be a historic meeting, and there's all manner of issues that'll probably be discussed, including the state of the Russia-Ukraine war and whether Russia should engage in negotiations to end it, and so on. But we have a couple of other interesting things we've been thinking about that meeting, including the potential for an announcement around the Power of Siberia 2, which is another very major energy artery that we can discuss if you'd like. But we, like you, are outsiders looking in, watching with great interest, and very much looking forward to seeing what develops at that event.
Many people have speculated that the rise in the gold price we've seen over the last few months and really all of 2024, hitting new all-time highs above 2,700, is spurred largely in anticipation of this BRICS meeting, possibly rolling out a gold currency. If we do see a gold or partially gold-backed currency, what do you think that could mean for the gold price?
Well, the intuitive answer is it would be bullish over the long term, whether, again, this is a sell the news event where all the people who are betting on that event transpiring are already in and nobody is left to buy, remains to be seen. It does, as you mentioned, seem to be consistent with a pattern of central banks accumulating gold ahead of the meeting. If gold is going to be a substitute for U.S. Treasuries as neutral reserve asset in the settlement of imbalances that arise from international trade, then it probably the equivalent price of gold is probably not $2,640 an ounce. It's probably some multiple higher of that. And so we shall see. Predicting the sort of intrigue around geopolitical deal making and poker playing is pretty challenging for outsiders. I think you can try your best to read the tea leaves and see the evidence. I can only say that gold has been on a straight march up, basically, with impervious to war in the Middle East or pick your favorite geopolitical risk. It just seems like after a reasonable pullback, there's always a bid. As our friend Sir JJ over at Market Vibes Substack likes to say, when a commodity hangs around its all-time high, it just means there's unfilled buying below. And so we'll see a little bit of a pullback here into the low 2600s after topping out, like you mentioned. We are obviously still uncomfortably long gold, but we wouldn't be deploying new capital to dollar cost average our basis up in this environment. We're kind of have more than enough for what we need, and then we'll be spectators like everybody else.
Now, I've mentioned how a lot of people are speculating. It seems like, that's largely what we don't have direct information on what the BRICS are doing here. But we do have a viewer's question regarding that. The viewer asks, is an overnight gold revaluation possible? And I think kind of two parts here. What are your thoughts on the revaluation potential that the BRICS would do with respect to gold? And also, what is the likelihood of the U.S. doing that to kind of revive or pay off the national debt?
Well, you'd have to revise gold a lot higher than it is to make a meaningful debt in the deficit, let alone the debt. We don't own enough gold to make that matter. As a general rule, I don't like investing in securities because that's basically how most people are playing gold. They're buying, Fizz or GLD. I don't like making investment decisions or trading decisions based on geopolitical outcomes. Broadly speaking, they're very difficult to time. You're almost always wrong. When they do happen, somehow, some way, the market makers are the only ones that make money. So, for example, I wouldn't get long oil betting on World War III in the Middle East. But if oil spiked to 95 or 100 based on, a temporary escalation, I would fade that rally because history shows that 6 to 9 months later, prices always collapse when you see a super spike in inelastic commodities like oil or natural gas. Gold is a different beast. It's not as inelastic because it's not necessary for everyday life. It is truly a store of value more than it is a vehicle for speculation. So I wouldn't get long gold ahead of this meeting betting that something substantial is going to happen, and I wouldn't get long gold betting on an overnight revaluation. In our view, it's highly unlikely. If gold is to be revalued, it's probably going to have been a negotiated behind the scenes deal where it has just stepped up quietly over time in an orderly fashion so as to not induce panic. So I would fade the overnight revaluation, and certainly the level to which gold would need to be, depending on whether or not you believe the U.S. official, gold holdings are real and audited, and it hasn't been audited in forever. You would have to have gold at an ungodly number for it to make a meaningful dent in the U.S. debt. So I don't think that is a pathway out of the debt spiral fiscal crisis that the U.S. is currently involved in.
Now, when it comes to the financial system, obviously the fiscal situation in the U.S. is a big concern on a lot of people's minds. But we also see, the inversion of the yield curve, and that seems to predict recessions very accurately. We have Brett is wanting to know your perspective on that. He says, history would suggest that when the yield curve uninverts, most people expect a recession to occur. Do you believe it'll happen this time?
Well, as you know, we wrote a piece earlier this year predicting there would not be a recession, at least until the U.S. election. And I think the data, whether you believe it or not, I suppose, seems to have backed that prediction. There was a piece we wrote earlier this year called Slick Landing, where we hypothesized that the dirt cheap energy prices in the U.S. and the superabundance of hydrocarbons that we're swimming in, plus fiscal stimulus, the government is spending like crazy. Just to put some numbers to it, I read somewhere that U.S. federal government is now 25% of GDP, and it's growing at 6% year over year. And if you do the math, that is 1.5 points to GDP before you've even started, which means the private economy would have to contract by, some number greater than that just to get us to zero. And so what happens after the election, however, is just a complete singularity that we refuse to predict. I mean, depending on how the election goes, who wins, or whether even a decisive winner is declared that the other side accepts, is such a jolt to the system that I think it's pretty difficult to predict what happens after that. So between now and the election, I mean, I don't think we're in a recession now. I think the data is relatively strong. I think inflation is cooling. The Fed is clearly cutting interest rates for overtly political purposes, as we predicted. Washington, D.C. is rallying around keep Orange Man out of the Oval Office, and they're behaving accordingly and in a very raw and political fashion to do that. Whatever your political views are, I think that's just an undeniable observation of reality as it exists, and you have to play reality as it exists on the board. And so, so no recession until the election, and then depending on what happens during the election, all bets are off after that.
Now, before we leave the BRICS meeting, I did want to discuss the BRICS meeting and also energy demand. And you also had a article recently on energy demand. But do you see developments with the BRICS country having an impact in energy going forward?
Yeah, we have a bit of a long shot prediction that, there's this long-standing project that has been under proposal/negotiation between Russia and China for a very long time, which is this very large natural gas pipeline that would connect the natural gas fields of northern Siberia all the way to eastern China. It's called the Power of Siberia 2. Obviously, that means there's an existing one that takes natural gas from a more southerly part of Siberia. China has been hesitant to sign that deal because they don't want to put too many of their energy eggs in one basket. And they have alternatives, which is a piece we're going to be dropping this weekend. But we wouldn't be surprised if we see such an announcement during the BRICS meeting in Kazan. I think if you're Vladimir Putin, that deal is almost as important as any sort of new BRICS currency. They have an abundance of natural gas and they used to sell it to Europe. And Europe's not buying it anymore. And so they have to find another place for it. And China's been negotiating pretty hard on price. But if that pipeline is built, it would be a decades-long rewiring of really important global energy arteries, and it would be profoundly bearish for long-term European industrial competitiveness. And so, in our view, whether that project gets the go-ahead and whether it's announced at that meeting is something that we're at least as interested in observing as opposed to just making this a meeting about gold and an alternative to the US dollar, because ultimately, all currencies are just derivatives of energy, and we're keenly interested in what happens in the energy markets, at least as much as we are in things that might impact the price of gold.
Definitely. And on the topic of the energy markets, I did want to ask you about one of your most recent articles about AI. Now, obviously, this has been really in the mainstream news. There's been a huge rush into AI stocks, but you're looking into how this might impact the energy sector and really pointing to maybe that nuclear energy could be the energy of the future. Can you expand on that?
Yeah, we've written two pieces on the subject. One, of course, is that nuclear is the obvious long-term answer for, decades-long access to baseload power that you need to run data centers and to train your LLMs and all of that fun stuff that big tech likes to do. And the Microsoft announcement around the reopening of 3 Mile Island, of all places, not the one that melted down, of course, but the reactor that remained that was only recently shut down. That is really a fascinating, jaw-dropping, milestone-type headline that is really normalizing the nuclear renaissance, as we predicted last year in a piece called Fission Ships. But we most recently wrote about how natural gas is almost certain to be the bridging fuel because you can spool up natural gas electricity production much, much more rapidly and frankly, much more cheaply than you could spool up a large nuclear power reactor, given the regulatory regime that we have and the permitting requirements and all of the lawfare that the environmentalists throw at these big, high-profile projects. For many, in all the states in the U.S., the state government has significant sway over permitting and speed to development, as long as state lines aren't crossed or international borders aren't crossed. So a state like Texas, which is home to the Permian Basin, which is swimming in natural gas, which is practically free, you can, as long as it's confined to your state, you can pretty quickly approve new power plants that are designed to not be connected to the grid, don't require transmission lines, and are solely built to power data centers that are co-located right next to it. And, it's much cheaper to send data across state lines and international borders than it is to send fuel or even electricity. And so we believe that you'll see these self-contained pods, if you like, where right next to the natural gas producing well, you have a gas turbine that makes electricity that powers data centers and high-performance computers all in one go. And in fact, we're seeing that in countries that export LNG. Why would you chill it, put it on a boat, and send it somewhere else? Why wouldn't you just intercept the fuel right at the source and power your data center right there? And that's, I think, a mega trend that's coming the next 5 to 10 years, as it takes about that long to get significant new nuclear capacity online. Given that speed is the dominant parameter, and one of our mental models is that our economy will reorient to stay on this Kurzweilian exponential growth in computing power. No matter what we need to do, we'll do it. And in this case, the obvious answer, the cleanest burning hydrocarbon on the board is also the cheapest, which means that's probably where big tech is going to go. And one of the things they'll have to do is come to grips with and or reverse the propaganda around climate emissions, because they're frankly not going to care about climate emissions. They have a dirt cheap, clean burning hydrocarbon available to suit their needs, and they're going to do whatever it takes to make that happen.
Now, when it comes to petroleum, we have a viewer's question. Izzy is wanting to know, famous petroleum analyst Art Berman believes the United States will peak in shale oil within the next 2 years and most likely go into a permanent decline after that. Do you support his viewpoint, or do you disagree with him?
Well, we wrote a piece called Peak Cheap Oil is a Myth, to which the aforementioned Mr. Berman was so offended by it that he put up an entire webpage basically calling us cranks. I won't respond in kind to his, frankly, vulgar comments about our work. I will say we are swimming in hydrocarbons. Peak cheap oil is a myth. The same people who are arguing that we're about to run out of shale oil were arguing that the U.S. would never produce economic shale natural gas. And here we are, 50 billion cubic feet later, the world leader in natural gas production, and we can't give it away in some parts of the country. There's so much gas and oil around the world. I'll give you one example. We wrote a piece about the Vaca Muerta shale in Argentina. And look, Argentina's a basket case, and it's hard to get rigs down there because of various government issues and currency problems and debt defaults and all that. But that's all politics, right? And after we published this piece about the Vaca Muerta shale in Argentina, a subscriber of ours pointed us to a podcast where an expert in that particular development and a world-renowned shale geologist said that the resource could easily handle 5 to 6 million barrels a day of oil production. Not that he expects it to get there, but the resource itself is so vast and so readily accessible that if Argentina ever did get its act together, it could be basically another Permian. California has an entire shale deposit that is basically in inventory because of politics. If the types of scenarios that peak cheap oil truthers believe would come to pass, the politics of the Gavin Newsoms of the world would be swiped aside, and then we would start developing those resources. Huge hydrocarbon deposits in Venezuela, Guyana, Canada. In this piece where we're talking about the Power of Siberia 2, the alternative for China is Turkmenistan. They have so much natural gas. They have more proven reserves in the U.S. and they produce 7% of the natural gas we do. There's an enormous abundance of natural gas in the world. And anybody who is telling you that we're going to run out of hydrocarbons, be it oil or natural gas or all the liquids in between, frankly doesn't know what they're talking about.
Now, back on the topic of the BRICS countries, Paul is wanting to know your perspective on if the BRICS countries do go into or do use a gold-backed currency unit, then do you think that will force other countries in the West to also adopt gold? The question is, how soon will the BRICS force the G7 to back their currencies with gold?
It's an interesting question, and frankly, that's the type of scenario analysis that's difficult. This sort of chaotic system, right? You could envision a world where you are bifurcated between BRICS, gold-backed, and G7 fiat. And look, don't underestimate the G7 countries, the G20, the Western world. They will have their responses. They're not just going to stand aside and allow one of the most important pillars of their geopolitical power to be undercut. I think it's going to be a far bumpier ride than people who are hoping for a gold revaluation to occur overnight envision. This is a century-long battle, and I don't think it's going to be settled this month in Kazan. So the U.S. can just decide that anybody who uses BRICS, for example, is going to be sanctioned. Like, they could decide that. And none of the countries involved in BRICS can actually persist outside of the U.S. dollar system. And so it is a very powerful weapon. That's not to be underestimated. I happen to think the weapon is being abused, and that the abuse of that weapon inevitably has to be the foundation of its demise. But we're not talking weeks or months. In my view, we're talking decades.
Now, the second part of Paul's question here kind of brings up the topic of, do these countries have as much gold as they say they do? If you look at the BRICS countries combined, the official numbers, if you trust them, they have less gold than what the U.S. has. But that's assuming that the BRICS countries haven't secretly accumulated more gold and that the U.S. still has gold. Paul says, how long until it is obvious that Fort Knox is empty?
Who knows if Fort Knox is empty, to be honest with you? I don't know. You don't know. Paul doesn't know. My answer is I don't trust any official government statistic around gold. The only statistic that really matters is price. And even that is heavily manipulated, but that's fine. Eventually, prices reach their equilibrium. And so if gold is going to be revived and its utility is centered around its neutrality as a reserve asset, then I think that the total, quote, market cap of gold needs to be much higher than what it is today. But as you said, there's an enormous amount of, quote, off-balance sheet gold floating around in India and China, and who knows what the U.S. actually has. And there's a lot of cheating in this market, right? And so there's a lot of posturing. So it's a very, very difficult thing to model. And our view is that it's better to react to major shifts as they unfold than to try to predict them.
Now, Hans is wanting to know about the current bull market in precious metals. He asks, with the approval of ETFs and more institutional adoption, how do you think the next precious metal cycle might differ from previous cycles?
Yeah, I mean, I think there's so many dark forces at work in both gold and to a lesser extent silver that anybody who's telling you they have a definitive map of what's going to transpire is kidding themselves. I own gold. I believe you own gold because we view it as the most stable preserver of wealth available. Slightly better than land because it's more liquid in my view, which is why I own at least as much gold as I do land. And so ultimately, I don't own gold hoping it goes up. I own gold because I count my net worth in ounces of gold and acres of land and a few other metrics that matter. And as long as I'm earning in fiat and putting some portion of the earnings that I am able to generate into such things as land and gold, over the long term, I'll dollar cost average in, and I'll have be able to leave something to my family when my time on this planet is up. That is valuable to them, that allows them to have solid foundation to progress with the next generation. And I think most people who own gold treat it that way. And so the sort of the short term, volatility and all that, it's interesting. I observe it like anybody else. But it's not really the reason I'm in it. And so I don't spend a lot of time thinking about it.
We have one more question on energy from this viewer. Canada and US have an abundance of natural gas, which burns very clean. Why is this not taking center stage in the green revolution?
Well, because the green revolution is not about abundant energy. It's about less energy and lower standards of living in the name of saving the planet. And so the cleanest burning fuel of them all is nuclear. and it is the one that has been the most opposed. So why would natural gas be treated any differently than nuclear? And in fact, because it is so clean and so abundant, are the two primary reasons why it's so opposed. To be very specific and clear about it, there's a Malthusian strain amongst the environmental movement that thinks the Earth cannot support as many people as it has, let alone reasonable population growth from here. And they believe that access to cheap and abundant energy will drive demand for all manner of associated mineral resources that would basically scar the Earth irreversibly. And ultimately, the Earth cannot support as many people as it has on it. This is classic Malthusian thesis. It's been dead wrong for 150 odd years, and it'll be dead wrong for the next 100 years, just like all the peak cheap oil guys will be. And so, you just have to sort of put up with the noise on the background, but they're never going to acknowledge that natural gas is clean, or that, in fact, accessing cheap and abundant energy is a worthy goal. In their mind, we should have less so that there's less people. And that's just true. It's what they believe. Some of them admit it, many of them don't, but that is who you're up against. And so I wouldn't expect them to suddenly come to some great realization that natural gas is so much better than coal and it's abundant, so let's stop burning coal and burn more natural gas instead. No, they don't want to burn coal or natural gas. They just want less people.
How do we change that, or how do we invest accordingly? Because it seems like, as you mentioned, there are great arguments for the use of more nuclear energy or for the use of more natural gas. We have plenty of it. It burns clean, but they're not using it. So how do you look at investment strategies accordingly, considering that there's these false narratives out there saying that they're terrible?
Well, in reality, the market is using it. We are burning a record amount of natural gas worldwide, a record amount of coal worldwide, a record amount of oil worldwide. So I think the way to play it, we don't like to invest in the commodities directly. We don't like to invest in the producers directly because they tend to drill themselves out of business. But we are interested in people that can close arbitrage, for example. So if natural gas is dirt cheap relative to oil on an energy content basis in North America, then any company that can help close that gap or take advantage of it or profit from it is very interesting. Pick and shovel approach. If you have a technology, for example, that allows drillers in the Permian Basin to no longer have to worry about all of that produced water that comes up with the oil and gas and that they have to dispose of, that would be very interesting. So any supplier / service provider into the commodity sector that can unlock a constraint that allows production growth is very interesting. And their product or service is agnostic to the underlying price, except, of course, if prices collapse, demand would go down. But ultimately, they can price their product on a value creation basis. Those are very interesting to us. That's where we would look to invest. That's how we invest in the private world. We don't do much investing in the public sector, in the public markets. But we would be wary of trading commodities. People who trade commodities tend to only trade commodities, and they tend to be very good, and you'll be trading against them. We don't really like to buy or trade producers because, again, they have no discipline and they incinerate enormous amounts of shareholder capital. We would look more for companies that enable production growth or companies that enable the closing of arbitrage opportunities, because they tend to make money no matter what.
Well, Doomberg, we really appreciate your time and insights today. If our viewers are interested in learning more, they can go to doomburg.com, is my understanding. Can you tell us a bit about that and what they'll find there?
Yeah, no, that's great. I appreciate it. You can find everything at doomburg.com. We have 2 tiers. We have our annual subscription tier, which gets you all of our articles. And then we have a pro tier, which gets you a monthly webinar that we spend a lot of time putting together, where we do deep dives into mostly all things energy, although occasionally we will veer into other interesting topics. Elijah, it's great to talk to you again. Always happy to join you, and I'm looking forward to the next one.
Awesome. Thank you so much, Doomberg. You have a great day, and God bless.
You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 7th through October 14th, 2024, while supplies last. First, we feature Australian silver kangaroos at just $2.99 over spot. Next, backdated 1-ounce gold Canadian maples are just $60 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.